Today, let's talk about an idea that's somehow both super old-fashioned and at the same time pretty revolutionary. It's called public banking. It's a concept that actually helped power the early American colonies, but you just don't see it around much anymore. Now, though, with all the economic anxiety in the air, it's making a serious comeback. So to really get why there's this sudden new interest in public banks, we first have to zoom out and look at the bigger economic picture. I mean, the whole conversation really kicks off with a story of two totally different financial realities, both happening at the exact same time. And this chart, wow, it just lays that divide out so clearly. Get this. According to Forbes data from 2024, billionaires saw their wealth grow by an average of $2 million every single day. At the same time, a full quarter of American adults have less than $1,000 in savings. It's that kind of shocking contrast that has a lot of people asking, is our current financial system really working for everyone? Harvard law professor Christine Desan just hits the nail on the head with this. She's looking back at the huge government bailout during the Great Recession, and she basically points out that, yeah, we saved the financial system itself, but did we save the people this system is supposed to serve? That's not so clear. And that feeling is a huge reason why people are starting to rethink how finance should work from the ground up.
Okay, so this brings us to a really specific problem that public banking supporters are trying to fix. They call it the credit gap. And it's exactly what it sounds like. It's that empty space where traditional banks, for perfectly logical business reasons, just can't or won't meet every need out there.
Let's just break down the core difference here, because it's pretty simple. A commercial bank has one primary mission: make as much money as possible for its shareholders, period. A public bank, though, it's set up with a totally different goal in mind: to serve the public welfare. You see, their bottom lines are measured in completely different ways.
And that difference naturally leads you to ask a pretty important question. When maximizing profit is the #1 goal, who gets left behind? Which people and which projects just aren't seen as profitable enough to get a loan?
Well, the answer is often small-time borrowers, folks from communities that have been historically overlooked, and really important public projects, things like affordable housing or local efforts to fight climate change. I mean, these are all worthy goals, right? But they don't always fit neatly into that standard risk versus reward model of a commercial bank. So, you have this credit gap. How do you fill it? Well, this is where that idea of public banking comes roaring back into the conversation, pitched as this fascinating blend of something totally new and something deeply traditional. Okay, so what is a public bank exactly? Put simply, it's a bank that's owned by the public, usually through a city or a state government. Its money often comes from the government's own cash on hand. All the tax revenue a state collects. And its main job, its whole reason for being, is to serve a public mission, not to make the biggest possible profit for private owners. Now, what's really wild to me is the history here. Before the American Revolution, public banks were actually pretty common. After the war, the idea even spread to new states. And yet today, after all that history, there is only one public bank left in the entire United States. Just one. And that brings us to our big case study: the Bank of North Dakota. It is the last one standing, and it's pretty much the main proof of concept for this entire modern movement to bring public banking back. I mean, it was founded with just $2 million in capital to help out farmers and local businesses. Today, the Bank of North Dakota has over $10 billion in assets. It's become a total powerhouse and a huge player in the state's economy. And the stories about how it has served its public mission are just remarkable. For instance, during the Great Depression, when farms were being foreclosed on left and right, the Bank of North Dakota jumped in. It actually bought the farms, rented them back to the original farmers for just $1, and then sold the farms back to them at fair prices once the families were back on their feet. Can you imagine? And that mission is still going strong today. The bank gives out below-market loans for disaster relief, it helps fund schools and infrastructure, and it supports clean energy projects. But here's the kicker: it's still incredibly profitable. It returns something like $400 million back to the state of North Dakota every single year. It pulls this off because it has lower overhead, it doesn't have to pay out dividends to shareholders, and it actually partners with local community banks instead of trying to compete with them. But it's not always easy. This points to a real tension they have to manage. The bank's CEO, Don Morgan, talked about facing political pressure to take on more risk to get even higher returns. His response, though, just perfectly sums up the public banking mindset. He basically says, look, when a downturn hits, you're going to be glad I prioritize stability because I'm going to be the one with the cash you need. So you've got this really successful model in North Dakota humming along, and naturally that's got a growing number of people in other states and cities looking at it and saying, hey, why can't we do that here? You can see it in places like Massachusetts, for example, where a bill has been in the works. And look at the goals for a public bank there. They probably look pretty familiar by now. Helping out small businesses, funding affordable housing, and financing climate action. These are the exact kinds of things that tend to fall into that credit gap we talked about earlier. Of course, these new proposals face some major pushback, from arguments over how to fund them to opposition from the traditional banking industry. Which really brings us full circle, right back to this powerful idea from Professor Desan. The whole point of this movement isn't to invent something from scratch. It's about looking back at a really old-fashioned American idea, the idea that money and credit can be public projects, and then applying it in a revolutionary way to tackle the problems we're facing today. At the end of the day, this whole entire discussion really boils down to one fundamental question. Should we treat finance more like a public utility? Like water or electricity, something that's designed to serve the basic needs of the public. It's a huge question for sure, but one that could totally reshape our economic future. Thanks for joining me.